following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 22nd, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. Dial in at 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 29 points at 20,771. S&P is off about 2 points at 2363. NDX 100 is up 2 points, trading at 53.53. NASDAQ Composite down 2 points. A lot of twos out there. Of course, I'm rounding up and down. Nonetheless, we'll call it flat. Russell 2000 is off 6 points. Semiconductors down a point. Gold is off $5. Silver's off 2 pennies. Light sweet crude up 66 cents. Lead the charge here to the upside dollar-wise. 14.50 is Valmont Industries. That's about 10% to the upside. NetEase up 3.5% or $10. Dorman Products up nearly $6. Innofos Holdings. I'm sure I totally blew that pronunciation. IPHS, though I got that correct, up 11%, nearly $6. Priceline up 4. Google's up 4. Garmin is up about 4. Norwegian Cruise Lines up 360 or about 7%. To the downside, United Therapeutics, UTHR, off 11.5% or $19. Concho Resources down nearly 5%, 660. Texas Roadhouse, I don't know, that's a grill or something. TXRH, it's off 13%, $6 and change. Papa John's down 6%. Fresh Del Monte, is that right? FDP, that's off about 8%. Cemetrex, that's off 56%. At least that's what it says on my screen. But give us a call, folks. I do want to take a look at what you want to look at. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So what do we want to look at? What do we want to look at? Well, my guess is it is the indices out here. So which indice do we start with? Now, why don't we start with the indice that's not tradable, but yet can give us a decent early indication as to what is or what is not going on inside the market. So let's go take a look at that. Well, I'll tell you what. Let's step back just for a brief moment here. Let's take a look at the summation index. Let's take a look at the advanced decline oscillator readings for 3 of our indices, that being the New York Stock Exchange, which just needs a few more net declining issues to take it down below 0. So at the end of the day, and you know how much I hate to say at the end of the day, I think the number is, well, let me look. I've got a little spreadsheet here. I calculate this sucker every single day. It would be 741 net declining issues. Right now, as we speak, this very moment, we're at 641. How about that? So it needs 100 more net declining issues to issue a warning sign. Tide may be shifting out there. So we'll watch that at day's end. 741 was the number to actually get it just below the 0 line out there. Right now, the message it is still bullish. If we look at the NASDAQ composite, it is up above zero. What did it need at day's end today? NASDAQ composite needed 1,219 net declining issues. It's not there, but that's one of the things you'd be looking for. Inside the Dow, still just steamrolling to the upside out here. How many issues does it need? I don't have that calculation, but it probably needs a lot more than what we're going to see by day's end. And inside of the S&P 500, what you and I like to look at is we like to look at the VIX index. So where is it traveling to? Well, here's what you and I know. That 50-day exponential moving average continues, and I do mean continues, to act as resistance. It has been at resistance, you guessed it, since November the 9th. All right? Since November, with the exception of one day, one ping bacilli, really a day and just a tad, but that being the day was December the 30th. But who's counting December the 30th in the picture out here? As long as the VIX index, the volatility index, the liquidity gauge, the liquidity meter, call it what you want. Do not call it the fear gauge or index out there. It means this is just irrelevant. How do you trade that? But what you can do is you can trade where is the VIX, the markets, the S&P 500 specifically, in relationship to what is it doing with regard to its 50-day exponential moving average. Now, you're not going to call tops or bottoms with this, but my goodness, you will certainly understand the power of the trend. And it still is saying, for goodness sakes, there are gobs of liquidity when we take a look at the volatility index. What's the number to look at right now? 1192 would be the number where you'd need to see a close above in order for the change in trend message to occur. So what happens if, in fact, we get the advanced decline oscillator reading inside the New York Stock Exchange down below zero, and we have a VIX index that is not trading above the 50-day? I say you remain strong and long, and all those you do not jump on the short side. You want more proof than that. Now, that does not mean that there are not mucho grande problemas out there, and I know I butchered that, but what the heck, I gave it a shot anyways. And that being, if we take a look, a little bit deeper look at this advanced decline oscillator reading out here, that's really the difference between two moving averages, that being the 39 and the 19, when we take a look at advanced decline data out here. So you can see right now where it's printing out at 978 is the number on the right-hand side of my screen out here. One of the things that I want you to take notice to, you and I, we make a big deal, and I do mean a big deal out here. We make a big deal when that level gets up to the plus 150 or higher area. Because when that occurs, like it did back here on December 8th, what that does is it offers you and I the promise for higher prices to come inside the New York Stock Exchange. Doesn't necessarily mean it's going to be the very next day, but higher prices to come. It just tells us that we have a lot of fuel inside of our jets out here. And you can see how this indicator, or this level is really what I should say, really works. That occurred right around December 8th. We saw another crossing of that line back in November 23rd, right around the Thanksgiving time period out here. We saw another reading like that back here on July the 12th. That led to higher prices. But folks, look at where we are at right now. We're talking about, you and I, this thing breaking the zero line. Something isn't right in the New York Stock Exchange. We can't trade it. Steve Rhodes from TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. No cards and letters. Basically, that means no emails from folks out here. So let's go ahead and continue on taking a look at the New York Stock Exchange out here, because I probably am, I've been consistent with regard to the fact that this market is forming a top of consequence out here. And so as we take a look at it, we do have a caller. That's even better than an email. So let's go to Brent in California. Brent, thanks for calling. Thanks for holding. Sorry about that. Didn't notice you on the line out there.
Not a problem. Thanks for taking the call, Steve. How are you today?
Good. I saw, at least here in Florida, about as far southeast as you can get from where you're at. They've started showing on the news some of the rain coming down a little much further west and south from where you're, in the San Jose area. Looks pretty nasty out there.
Yeah, we're actually have a little sun today, which is, welcome. Just a little break before the next wave comes through. I think we have more coming in this weekend.
So, yeah,
if
okay.
we just get a few days break here, it'd be nice.
Yeah,
I emailed you last week about J Dust. I bought that at $12.20, and I'm doing fine in that. I guess my bigger question really is, I saw signs that just the GDX, and not so much gold, but those stocks were maybe kind of topping out, and then the J Dust was bottoming out. And so I went ahead and picked that position. But I guess the bigger question is, where do you think that this could pull back to as far as the GDX and the miners and just some of the individual stocks? I see some of them are getting hit pretty hard today, like AU and Harmony. They had a fatality at one of their mines, so that's kind of specific to that stock. But I just saw a few of them look like they're kind of taking a decent hit, and just wanted to get your thoughts on it.
Sure. So, folks, and it's a great question that Brent has asked. And the more important question was that he's taken a look at the GDX. Now, J-Dust, is that in essence basically trading off of the GDX?
It is. It's actually tied to the GDXJ.
Okay.
It's the invert. It's the inverse of that. So it's the bearish triple bear of the junior miners.
Sure. So I just want to make sure and the reason why I say that, folks, is because at any point in time, you can just simply go to your search engine. You can type in GDX. It'll take you to the VanEck Vectors Gold mining page, and in there you can download exactly what the holdings are as of last night's close, so that you understand what the weightings are. If we were to do that, what we would find out is that Newmont, Gold Corp, Franco-Nevada, AEM, Royal Gold are the top 5 holdings inside that. So really the question is, I believe, was where can that pull back to? If we just simply take a look at the GDX out here, the area that it is targeting next, very likely, is going to be the price point of 23.61. You're at 23.86 as we speak right now. Now, that happens to be the weekly TAS profile out here, and so that's going to be an area that you want to watch. Volume today, right now, folks, is 30 million shares, and in essence, it's going against 56 million shares. So it seems to me like it's coming down with similar to lightish type of volume out here. The big volume bar, the big breakaway bar, and the price area where I would say the GDX is likely pulling back into is the January 5th area. And, Brent, that had 135 million shares. So I would be watching the 23.35 to 22.35 area. If for any reason that was to be taken out, then you'd be looking at the GDX trading back to 20.71. If I just look at retracement values, that meaning going from the December 20th low to the high out here on February 8th, lining up with this area that we're talking about, which is the January 5th area, it's only a 0.382 retracement. Maybe it gets to a 50% retracement if it tests the bottom of that area. But it would look to me like that is where it is likely headed to. Now, I'll give you the bearish side of the GDX. And that is this. I'm going to put this chart up on the screen. Now, off of that island bottom pattern, which we know is a very bullish pattern out here, that formed sometime between about December 16th and the 24th. So it gave us a nice little holiday present. That's a very bullish pattern. From that low, when that, by the way, that low price is moving lower, doing less relative energy out there. So one of our favorite trampoline type patterns. But as it moved higher, it's only made a 6th wave move to the upside. Now, the problem over the last 2 days, 2 trading sessions, has been that it's trading below my oscillator unchanged line. That's the red line out here. But the more important thing from the bearish side of the mining sector is that it now has a price oscillator below 0 and is falling. So that says maybe there are more problems in River City than we anticipate out here. If it was just falling and it was above the 0 line, it would just really be saying just retracement is in place. So there are some connotations with regard to what the GDX is doing, even though it hasn't really pulled back much. That just says, you've got to be careful. It's kind of like, I guess it's like the dam. We've just gotten a report here that the dam has got some problems with it. Now the question is going to be, the dam builders, those being, and I didn't mean dam builders, I meant dam builders, those being the bulls out here, are they going to try to step in? So that's when I take a look at the GDX. Does that make sense, with regard to what I've taken a look at? Or is there any question that you might have from that?
It does. That's kind of the area that I was looking at because, where it had some decent volume coming off that bottom. So that was more or less a target area to be watching. It is kind of playing out the way I suspected it could, and I just have my eye on some of those. I'm going to be patient and just wait because I bought all that stuff way back at the beginning of the year and did well with it, and then I closed out those positions, and so now I'm just looking to potentially get back in, and it all depends how they pull back. They have to do with lighter volume and do all those things that we look at. But if that all happens, then I'm putting a list together and see what happens with it.
Yes, yes. So if we let's take a look at Newmont Mining out here. And Newmont Mining today, so that number one weighted inside of the GDX, which is certainly influencing what it is that we're seeing. 6.4 million shares as of 125. Now that 6.4 million share day is going against 10 million shares from January 5th. So that same candle, in essence, inside the GDX that we were looking at. So I would say this is coming back into that area with volume out here. And that would say, you know what? More of a pullback is likely. Now, today's action, assuming that it does not close above 36.59, says that Newmont Mining wants to pull back to the 33.66 level. So I would be watching Newmont Mining as an example. If we take a look at Gold Corp GG out here, this is, let's see what this is doing. This says that it wants to pull back to approximately $15.99 to $16.18. So those would be the areas I'd be watching inside those two miners specifically.
Okay. Do you mind if I hold just for a second, Steve?
I would love if you held. We'll go back to
right.
Brent when we get back from this break. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome Welcome back, folks. Hey, Brent, thanks for holding. I want to make a correction here because even though I was saying it did make sense to me, and then I looked at and I had a system problem here, which I've now corrected. But the price oscillator for the GDX, it is above zero. It was set to a short-term set of numbers 3 and 9. It should be really 19 and 39. So this still says just retracement mode that is in play. Doesn't really change the target levels that we took a look at, other than the standpoint from the standpoint that it's not in what we'll call a really difficult situation. The one other level, Brent, and then I'll go back to what you wanted to ask me about that I would take a look at for you or anybody else that is in one of the short mining trades out here, is watch the Japanese yen U.S. dollar correlation. If I take a look at a 10-minute chart out here, again, we're just simply going to see, and that's from a directional standpoint, but we're going to see, the actual dance that is going on between these two. Why? I don't know. I just know that it is. So it becomes another gauge for you to watch. Now, as we take a look at the daily chart out here, what we're going to see is that this currency pair has found a significant area of resistance at the top of its daily level. So, Brent, the number you would want to be watching is 113.70. If that currency pair begins to trade above and close above 113.70, what it should do, it should put more pressure on the mining sector stocks out there. So that will just assist you. And that would also say that this currency pair would get up into the 115 area, 115.17 to be specific. But right now, it is really trading into resistance here. So, and this resistance level has held. So I would be watching that as well. Okay?
Yeah, that's always a helpful little tip you give, and there is a definite correlation between the two. So,
yeah, like this morning, I just happened to have a 2-minute chart on, and Tom and Tommy were on, and they were speaking with a guest, and and it was like in a minute, Tom had noticed that gold had taken about a $5 hit, and in fact, it did. When I went back and so that said, well, hey, I ought to go. I just want to go see what's going on inside of gold. I'll see if I can get back here. Here's the 2-minute chart, and so it was at 10:38 specifically, and you can see this big, huge spike to the downside that occurred inside of gold. Now, the question becomes when you see a big, huge volume spike like this, and the low has not been taken out, and this is an intraday chart, but we can still learn a ton from this, and you see a lot of volume. Sometimes the initial inclination is that, okay, price is going to really start moving to the downside. But the question is, when you see that kind of volume, the question is, who was buying that? Was it professionals that were buying that? Or was it professionals that were selling that? Was that kind of like a climax point? Even though on an intraday chart, and I'll put up the Japanese yen, same 2-minute time frame, you're going to see the same type of spike that took place. Now, this is the yen futures, and here we can also see a big, huge volume spike. Now, inside of this, we can see that this has continued to move lower. So it should still continue to put pressure on the mining trades out there. So, and that's another way, folks, that you may not access the currency pair, which usually you can get that for free for the most part. But otherwise, you can just go ahead and take a look at the live data by looking at the futures contract out there. Okay, so enough of my spiel, so to speak. How else can I?
No, all the information you can provide that's always helpful, Steve, and you always do a great job of that. I do appreciate it. So
thanks.
I was looking at potentially on that Jade Dust. I'm just going to keep an eye on it, but it looked like it maybe get up to 17, 18 or something. So that's kind of my target on it.
Yeah, and its market profiles they're somewhat unreliable. They're reliable, but not as reliable because of so many of the just simply because of gold, the yen, and so forth, its influence. But what I would say is that one of the positives for you today inside this trade, and this is the first day we've seen it, is that it's trading above a brand new weekly market profile. Now, the reason why I bring this up to you is because on JDST, the bottom of the box that level, that price value is 1405, and the point of control, the center of the box, is also at 1405. That is a very strong support level. So closing above that today, in essence, if we were just to rely upon market profiles, would be very bullish. And it would also suggest that price could bounce up into the 23 level. Unfortunately, I don't think that's the case, because that, in essence, trades off of the GDX, so to speak. We don't have that same kind of set of market profiles out here. So anyways, I just wanted to give you that for the JDST trade.
No, that's great. I appreciate it. All right, Steve, thanks again so much for your help and taking the time to go through all that. And it's all great information, so I really appreciate it. Have a great day, and I'll talk to you soon. Take care.
Sounds great. That was Brent in Martinez, California. And Danny wants to take a look at GDXJ, so we might as well go ahead and finish this out and take a look at it. And really the same thing applies here. If we take a look at this with regard, I would imagine, Danny, the question is, where could this pull back to? That kind of stuff. If we take a look at it, as an example, let's put the volume back up here. So today's retracement is with 6.7 million shares going against the breakout of 37 million shares out here. Now, this one looks more bullish, Danny, than the others that we took a look at. Interesting. Here, if we were just going to analyze GDXJ and disregard currency pairs and gold as an example out here, we would say, man, all this is doing is pulling back into a breakout area with light volume, right? You like to buy breakouts, and the way you buy a breakout is let price pull back with light volume, or you like to sell breakdowns, let price move higher with light volume into it. And we use those gaps as those areas. And there was a gap between February 3rd, which had 10 million shares. So you're even pulling back into that area with light volume, and the actual, breakaway gap, so to speak, 37 million shares. So, Danny, I don't know if you're in it to win it, you're trying to find a place to get in it, or just trying to understand, hey, you're in it and you're concerned about the retracement. I would suggest that you don't really let this thing get below. If it gets below, place to buy. We got this little sideways chop consolidation that's going on. And so the place to buy, I would answer it like this. Now I'm going to give you a little secret out here. And you just keep sending those royalty payments to me. We're going to get rid of volume because it doesn't matter. I'm going to suggest you don't buy. You see this little blue line down here on the bottom of my screen, Danny? This is a tool and syndicator. And I forget the guy's name who invented it, who created it. Off the top of my head, I can't recall. But this is what's referred to as the choppiness index. Now, it's a great tool. It is especially a great tool for gold, an additional great tool out here. And you can see the market has been chopping sideways since the early part of February out here. A new trend will form. Doesn't tell us which way the trend is going to form once this bops its head back below this threshold line, which happens to be, and the reason why I like this guy is that it's that threshold line is 61.8 out here. Wait till the choppiness indicator, dips below, and make sure of the direction that gold is trading. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So Maria in the Tigers Den asked if I would take a look at the ES Mini. And let me see here. The exact question is, where is it? Boy, sometimes my screen on the little Tigers Den is small, so as things roll up, it's hard to get. Steve, do you mind talking about the ES and the eventual upside targets? I know that this market is smoking the carpet, but maybe 2392 is the next picnic area. And it's interesting, Maria, that you pick out the level of 2392. I would say 2397 is what shows up on my screen. So you and I, we are not going to fight over $5 out here. 5 points inside the ES Mini. Now, the reason that my system came up with that, and I would just simply have to do a little bit more research because it's important with regard to where I begin my start date inside of the ES Mini out here, which right now I've got data going back to 1997, September of 1997. This is a daily chart we're looking at. I'm going to put this on a weekly time frame. I'm going to shake the woolies out. Let me do this here. Let me try to explode it just a little bit. Now, folks, the lines that you're looking at on my screen out here, and let me do this too. These are what are referred to as horizontal trading ranges, and they're especially helpful. They're always helpful, but they are especially helpful when there is no left side resistance. You might say, what in the heck do you mean about no left side resistance? Well, typically when you and I take a look at where is price traveling to, we look at prior swing points. In fact, right out here, in fact, if I turn these horizontal trading ranges off, there we go. If we take a look at the highs inside the ES Mini in 2000 and the highs in the ES Mini in 2007, we can see how these were areas in the 1570 area where price just simply turned down. They're kind of like, like climbing a mountain. There's no more mountain, so to speak, out there, right? It just simply got to the peak. Now, we usually will take a look at retracement levels or expansion levels of these areas for where price targets are. They simply become rest areas, as Maria so well went ahead and placed that. Now, when there's nothing on the left-hand side, there's nothing really for us to measure. Now, the measurement that we could take here would be an expansion of swing points. So if we take a look at what those would be, and I pretty much am just looking at 2 levels of expansions. Well, we can look at 4 or 5. We can look at as many as you want. If we take a look at from the highs in 2007 to the lows out here in 2009, what we're going to see is right around the 2150 area, and I probably haven't nailed this to be exact out here. That is 1.618. So we're above that area, and I know I didn't nail it exactly. We can figure out what the 2.0 level is if we want to reboot this. I just have to go ahead and type it in. Let me do it right here. And let me put in 2.0. There we go. So 2503, is that, 2503 would be an area. What was the number you came up with? Well, 2503 would be the 2.0 expansion, Maria, of that number. Now I'm going to just simply go ahead and turn on my profiles, and we're not near that 2503. But the next level, so when you get beyond anything to the left-hand side, we like to take a look at, and this is a weekly chart showing monthly, weekly, and daily horizontal trading ranges. You might say, well, why are they all different? Well, they're all different because this calculates the area where price is most comfortable, meaning an open or a close, because we simply take a look at the body of the candle, because that is the essence of price out here, and therefore a daily close is different than a weekly close with the exception of Fridays, and a monthly close is different than a daily and a weekly close with the exception of truly the end of the month out there, which doesn't really apply sometimes to the weekly close, right? So it's always going to have different numbers. Now, in this case here, we're above the weekly, green, 2217. In the ESP, we're above the daily, 2282. So the next peak that it is headed to is 2396, the actual monthly profile level out here. Not profile, but that would be the area that I would be targeting. And I see we've got one of our other Denners who uses some other extraordinary tools out here, and he's calculated a level of 2396. And you can see that this comes up with 2396. And Maria had 2390. I don't know, 2 or 1 or something like that. So somewhere right around that level. So that would be, if you were to ask me for an upside target, that would be the upside target. And that may, in fact, be the target out there. But and that would be a monthly horizontal trading range level. And I would say that price would likely then begin to pull back and retrace. Now, there are plenty of signals out here to certainly be aware of. We started talking about one of them today as an example, watching the New York Stock Exchange. Still bullish as we speak right now. Watching the volatility index. Now, the volatility index is kind of, it's starting to rear. It's, no, it's not rearing anything. So skip that. I was seeing things, and I just simply need to put on my glasses out here. Let's go back to here's a couple of issues that are going on inside of the markets, and these aren't very negative things out here. So to me, it's not a matter of if. And, of course, somebody's going to say, well, God, Steve. I don't know if they'd say God, Steve, but they would say, for goodness sake, Steve, the Dow's gone up 9 days. It eventually has to have a pullback. I'm not talking about a pullback. I'm talking about a full-blown, nice retracement. And the more that the market stretches, the more that we're likely to see a fairly decent retracement. Not just decent. I mean, really decent. Now, it's not like it's the end of the deal out here. It's not the end of the markets. They are going to continue to motor higher. But what we'll be looking for when it happens is one of those scary bottoms. Now, if you take a look at the top chart out here, we've been watching this for the last several weeks. That's the difference between the Russell 2000, the Russell 1000. What the market likes to see, what the market likes to draft behind is the small caps out here. And it likes to see them in the lead. Now, in the lead means that the small caps are outpacing the large caps. When we take a look at the Russell 2000. And right now you can see this blue line up top. It's got declining tops. 2, it's actually ticking down as we speak today. It says the small caps are underperforming, which they really have been underperforming since about January, December the 9th out here. We've got a nice divergence, and each of these nice divergences, folks, has led to very good declines in the market out here inside the Russell 2000. So, I hear a lot of the folks on the different financial channels and things of that sort. And I know everybody wants to go to the party, and I want you to go to the party too. And I don't mean to be a party pooper. And it's really not me. It's got nothing to do with me. What it has to do with are these patterns that repeat over and over and over and over again. I sound like my father when he was alive. And so this is, it's really important to watch this. The New York Stock Exchange, again, we can't trade the indice, but it's also given us one of those serious type messages. That advanced decline oscillator, right? We're at all-time highs. When you get to all-time highs, you get to that 150 level. Just as it did, it was really the point I was trying to make back in November, and then in December, and then back in July, and then back in March of 2016, back in October of 2015. We're not there. This is saying big problems exist in the marketplace that a lot of people are ignoring. Not you and I. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 32, S&P is off a point. The NDX is up a couple. So kind of a flattish market. Now, maybe what folks are waiting for, traders are waiting for, are the minutes which are going to be released at 2 p.m., the Federal Reserve minutes out here. So that'll be occurring during David White's show. Hey, I also wanted to remind you, if you hadn't heard, that TFNN, Tom is hosting a live event in Tampa, Florida. It's going to be on Saturday, March the 18th, The Art of Timing the Trade. And now the cool thing is it doesn't cost you to get into this event. It's going to be on a Saturday. It is between, I think, 8:30 till about 2:30, now between 12:30 and 2:30. There's a nice lunch that's being served. It's at a great hotel in the Tampa area, the Westin, which is out near the airport. So if you want to fly in for it, it's going to be it's going to be great again, right, to have a live event out there. So check on all the details on the homepage at TFNN.com. Now is a good time to be planning. It would be better if we're cold up in the Northeast and every place else. But no matter what, just come on down and get a nice little suntan on the beaches of Clearwater. It doesn't get too much better than that out there. So we'd like to see you at that event. Now, with regard to the last few minutes that we have together out here, what other message is it that I could provide for you? I've given you the best that I've got. I'm pooped out. No, I'm just kidding you. So the markets still remain bullish from a technical standpoint. Important levels have not been breached yet. When those levels get breached, and so, therefore, my opinion is it's still too early to try to time the market to the downside, because all those signals right now, even though we've got these indicators, these divergent indicators that are saying you've really got to be cautious, it's still, you can try to time it, but it's just not worth it out here. Just wait for some confirming signals inside the market. Look, if you want to sign up for my newsletter, you'll know that signal if it's occurring overnight or in the morning out there for sure, and how to trade it, about how long it's going to last, all those types of things out here. Of course, you can do that by going to the homepage at TFNN.com. With regard to other individual stocks that we can take a look at, Apple. Let's go take a look at Apple. So one of the questions at dinner last night, and a lot of the conversation was about Apple, what's behind the move in Apple and so forth. And I listened to what a lot of folks had to say, because I'm always all ears, so to speak. My impression with regard to what's going on with regard to Apple, and it's really since the November 14th bottom that it put in, so just 2 days after the election results, were the realization, how much money does Apple have parked overseas? 80 billion, 100 billion. I don't know the number. Somebody there knows the number. Somebody out in listening land knows the number. How much money is parked overseas in Apple? And so whenever something occurs with regard to the movement of funds back here, whatever the overall tax scheme and scenario is, and maybe this is all priced in to it, part of the big movement that is out here. Yeah, tax is one thing, but I tell you what, with regard to the share buyback inside of Apple, with regard to that money, that could be just another huge thing. And there's trillions over there, right? And there's some companies that are really going to be able to take advantage of it. Apple. I don't know who else has got money. I mean, Google's got money over there. Microsoft has got money over there. Just a bunch of folks. But I think part of the real big move in between where Apple is going is really because of the repatriation. Did I say that correctly? Of funds. Just food for thought. Folks, stay tuned. David White's up next, because it's wonderful. Oh, it's Terrific Thursday, right? Yeah, it's Wonderful Wednesday. We just have Tom from 3 to 5. I'll see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.